What's up, y'all? Today I'm going to be doing some technical analysis on Grab Holdings. This one caught my eye. I think we can get a little pop more. But overall long term, just simplifying this, you can see big black candles are on your chart. It may be red, but these are big down candles comparing to an up move. And then also we can use our eyeballs to see this inside candle, right? You see this inside candle, usually it likes to take out a high or a low and then trade to the opposite side. Now, as you can see, it took out the high. So we may get another retracement back into the 270s for long term. But I seen this short term, and I think we could pop more, man. I'm not gonna lie. So I like to start off on the yearly chart. So let me just draw out everything. Get the fair value gap here, right? FVG, come on, man. FVG didn't close above yet on the year. The year's not over. Usually it gets volatile this time of year, November, December, which means you get some nice moves. See another one right here, man. Inside candle didn't close well. Now it doesn't do it all the time, but eventually it will. Usually, doesn't have to happen. You know, as you can see, it already took out that one and traded to the top of that. Now I like this a lot. This is why I like it a lot for a pop. It closed above this fair value gap. And it's now trading below it. You know what it usually does to start? It usually manipulates. And then also create the fair value gap. Now this candle's not done yet. You still got 2 months. So you got a long time, but that's good. Because it could look at all this gap, fair value gap. Look at this. This is a big gap. It needs to fill basically. But let's see here. Okay, I'm gonna draw out my range. I like these. Now that's the yearly range of that candle, and you can see these levels are damn near perfect. I mean, now what I would wanted to see is if this would close above this orange one. Or this, this orange line. That'd be money. But it is very close. What do you see up here? A double top. That's liquidity. That means price wants to go above. Price trades to liquidity. Yeah, internal liquidity. Not that. That's just external. 3 month, you got the monthly. I mean, that's bullish. Boom, close above that gap. Now maybe if we can get a weekly close above that red line, or a daily close above that red line. I mean, geez, it may come down into this gap. And that would be a pretty nice entry, dude. I mean, what are you waiting for? Weekly for value gap. I mean, let's draw the range on the month. Do the same thing. Usually these are good price levels. Now, as you keep doing this, it's going to get harder, so you can delete what you don't need to see anymore, you know. So you really don't need to see this red one right now. Let's drop into the... Now everything's reciprocal. So usually the daily is reciprocal to the monthly. This is the monthly chart. As you can see, what do you see? Price closed below this level. So you can expect price tomorrow to come here. And you see this gap? It may come into that gap and pop. That's what I would expect. Or there's another fair value gap. This big gap right here. This is basically a bigger gap. It may come there and pop. I wouldn't buy longs right now. I think I would wait a little bit. But if you buy now, target up here, my stop loss would be, I alerted this in my Discord, mine would be below the 50% level of this fair value gap, which is that light blue dashed line in the middle. Technically, you have to wait for it to get here, but I mean, by then, if it closes below the 50, I mean, do you really want to wait? Sure, technically, you're supposed to allow it to come all the way down here, but, you're just risking more. This is my target, 663. Let's see how much that is. So you buy low key, maybe here, 50%. You target up here. 21%, man. You throw in one rack, that's $200. You throw in $100, that's $20. That's a nice move. While you're risking. But I mean, if you get in here, you can. It just depends where you get. If you buy up here, I mean, you'd kind of want your stop loss to be right here. If you buy here, now you put your stop loss down here. It just depends where you buy. If you buy up here, I mean, you're really going to want to, I mean, if it comes down here, you're really going to want to take that loss. Just be wrong and get out of the trade. Lose 5%, 2%. And then when you do make a trade, make 20, 30, 40, 50, 100%, whatever. Minimize your losses, maximize your gains. As a perfect target. I think we will come up here. I have a high feeling. Up into this area right here. Take out the high of that. But I mean, man, because it didn't even close below this 50. You see right there, the 50, like hit it perfect. Why wouldn't it close above here? Why wouldn't it open right above there? Why would this day close right there? Why would after hours not want it to come here, So I mean, just you could drop into a lower time frame. Yeah, that's bearisher. I mean, it's more bearish. Close below this line. I would expect this area to get hit. Maybe the low. I'd expect the low. 549 is a good entry. This blue line right here is a good entry. 550. I really like this one. Long term, nah. Not right now. Because I think it's going to come back down. I mean, just look at the overall move. I'm just talking about a quick pop. But I mean, my God, I'm not gonna assume out my ass, but that's where I would expect price to go here. It just depends. If it closes in this gap, it's gonna want to run up to the 50% of this gap. Maybe $9. I mean, if you draw that range out, man. If you draw the big boy range, and we change that to, let's go orange. I mean, that's the 50% level. That would be a discount buying, shorting this right here. Boom. But this 3-month chart closed above that 12-month fair value gap. I like it for a quick pop up to the highs. I might grab some tomorrow, depending on if it hits where I want it to hit in the yellow. If you buy in the yellow box, you should be good, man. The yellow box right here, fair value gap on the weekly. But then you pair out that. I mean, if this ends up hitting here and you buy and it comes up here and it closes above these highs, you can expect price to run higher into the next PD array zone. There's a gap right here. 688. There's a gap right here. 808. You can just, if price keeps closing above, man. But once it closes below, I would get out, man. I wouldn't, because that's, if it's bullish, why would it close below a level? Now, it could close below, and then the next day close above. Then get your ass back in, man. What are you doing? But as long as you see it close above highs, lows, gaps, you can expect the next price run to be up. Now, if it goes down, get out. But usually it'll come down to fool you. You got to wait for a close, man. just manipulation to come down into here. And that's low-key when you should be buying. You see it close above the next day, oh, I'm in this. Understand. A close above is a big move, so you can expect price to retrace down. But anyway, man, I'm bullish for like a month on this or whatever until my highs get hit. But long term, not right now. But anyway, man, like, subscribe, help me get to Miami.